All right, hey everyone. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. If you're new, welcome. Let me briefly explain how this works. So first, we're going to talk about the economic calendar very briefly, so we're aware of any type of important events that we want to mitigate risk around this week. Second, we're going to talk about the Bitcoin analysis situation, which in this week's title, we're going to talk about dollar cost averaging into such locations as to where we are right now, but we're going to talk about averaging in terms of size, okay, which again, people don't usually make this connection. So we're going to talk about that. I briefly mentioned it in my article yesterday, but I thought it'd be a topic worth going into, especially since we're in a location where investing makes a little more sense. Okay, so we're going to talk about that. And then third, we're going to go into the Trade Scanner Pro. We're going to see if we can find any trade examples for the Trade Scanner Pro. Now, one thing I want to mention about the Trade Scanner Pro, again, it's the script you can subscribe for, or we have a bot that sends signals by email as well. This is a confirmation tool, and it's not exactly for beginners, okay? So if you're a beginner, you're going to have a hard time appreciating the value of the tool. That is the whole point of me doing these streams. So each Monday, you can come here. I stream at the same time every Monday, and the goal here is to give you a free lesson on how to use the Trade Scanner Pro most effectively. If you think you're just going to figure it out, because I get some of the feedback that I get, I can tell what these people are doing. They sign up for it and they think, oh, I'll just figure it out because, I know a couple of things about charts, and then they don't get anywhere with it, or they don't make money, and then they cancel, right? Because they don't understand how it works and they don't have enough experience to appreciate the value and what it can do for you. So again, that is the goal of this stream, is to teach you how to forecast properly so that you can get the most out of the tool, okay? And if you can't be here at this time when I stream, then that's why, you can watch it at your convenience. So I suggest you subscribe to the channel, like the video, and each week when a new stream comes out, you can watch it at your convenience. Make sure you watch at least the second half of the stream, because that's where I get into the Trade Scanner Pro and I teach you how to use it, okay? All right, so let's move along here and let's get this stream started, shall we? All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now let me say my quick hellos. We got Stian, of course. Say hello to Stian, everyone. Stian is the guy that helped me build this thing. Couldn't have done it without him. So thank you, Stian, again for being here. Lad, good to see you. LP, are we still in a bull market? That's a good question, LP, and that's a question I will answer here. Okay. Yeah, I'm working. Don't worry, I'm working on the thumbnails. All right. Anyway, thanks for the feedback, though. So first things first, let's get into actually, before I get into the economic calendar, let me just mention a couple of things in the description. There's a few links there that I just want you to check out before we begin. And that is, first, if you want to sign up for the Trade Scanner Pro, we have a 14-day free trial for the script, which is, again, you put on your TradingView charts. If you're more hands-off, we have a bot. And what the bot does is it sends out signals by email. So I'll explain more about that after, but you can sign up for free trials for those. Okay, also what we have is a free signal each day that comes out. You could sign up for that as well. It's also in the Discord community. You can also sign up for the Discord community. There's a free channel in there. There's a lot of information that goes through there. Alex from Romania, he moderates it very well. Also, Stian is available to answer a lot of questions for the Trade Scanner Pro. If you have any kind of technical questions or anything like that, he's been also there to provide a lot of support. So you have all that. Now, if you're interested in TradingView, a premium version, we have an affiliate link in the description there. That's Stian's affiliate link. If you subscribe, he gets a small cut of your subscription. But here's the thing. You don't need TradingView to run the Trade Scanner Pro, but there are some benefits to it. We'll talk about that also when we get into the Trade Scanner part of the stream. And if you're interested in another exchange like Bybit or MEXC and you're a non-US resident, consider one of those. Those are Stian's affiliate links as well. Those, when you open an account, you fund an account, and then you trade, he gets a small cut. Again, that goes in a long way into helping him support the community and do all the great work that he does. He's been making a lot of updates to the bot And eventually we're going to get to the point where the bot will take trades for you. I mean, that's all coming, okay? But again, the more you support him, the sooner that can happen. So you have that. Also, if you just want to tip him outright because you're not interested in these other products, there are some wallet addresses in there. There's one for Matic, right, or Polygon, and there's one for Ethereum. So consider that also. Show Stian some love. All right, cool, people. So, hey, Giovanni, good to see you. I'm pissed because of all the fake gurus. Yeah, there's a countless number of those. And you know what? They cause a lot of confusion for people. But anyway, you know what? That's not our problem, Stian. That's if you want to consume garbage, that's other people's problems. Anyway, all right. So before you get me on a rant, let's talk about the economic calendar, shall we? Now, what I like to do sometimes I like to tell you what's on it, and sometimes I like to test you and see if you know what's important and what's not important, because not everything on the economic calendar is important, although they always make it out to be. So anything this week anyone want to mention on the economic calendar? CPI and PPI. Okay. Giovanni, when are those? Can you tell us? When is the CPI? When is the PPI? Though the CPI is the what is that? The core producer price? Or was that I forget what that stands for. I think it's core. It's something price or price index. I don't remember the actual antonym. Okay, Wednesday and Thursday. Okay, that's what I thought. Right, and then PPI is the producer price index, consumer price index. That's what CPI stands for. Sorry, consumer price index. Now, these are important because I don't need to know what the names of the thing. What I need to know is what they do. Okay, and both of those numbers are inflationary gauges that the Fed uses, particularly the CPI. And if there are any surprises, right, there were things that are unexpected that come out, it could move the market in a dramatic way. That's why the number is important. That number usually comes out at 8:30 a.m. Eastern time. Okay, the PPI I believe comes out at the same time the next day or whatever. I believe it's the same time. Sometimes those numbers come out at 10:30. There are certain numbers that come out at 10 o'clock and 10:30 Eastern time, but those two particularly come out, I believe, at 8:30 a.m. Double check the number, the time. But the whole idea behind this is to be aware so that you're not going into the number with any kind of big positions on, or if you have an opportunity to take something off the table, you can do that as well before the number comes out. Because if there's a surprise, sure, it may go your way, but it can also go against you. So that's just something you have to consider, right? This is particularly important for day traders. So I just want to mention that. That's really all that's worth mentioning on the economic calendar this week. All right. The major events that we're always looking for, by the way, are non-farm payrolls, which is the first Friday of every month. We're looking for FOMC meetings, and we're looking for these inflationary type numbers, right? The CPI, PPI, core CPE, things like that. They can move markets in unusual ways that it appears to come out of nowhere, right? And it's usually because there's a surprise in the number that no one was expecting. So that's part of the random nature of the market. Anyway, so that's the economic calendar. Those are pretty important. So you want to be aware of them. Okay, now, next, let's get into the chart and let's talk about today's topic, which is dollar cost averaging with a sizing strategy. Now, when people think of dollar cost averaging, typically they just think, oh, okay, I buy some and then it goes lower and I buy some more and it goes lower and I buy some more. All right, okay, you're right. That's the idea. But the thing is, you have to have some sort of framework around that, because that can get you into a lot of trouble, especially if you do it in an asset that is not really, it's an asset that's very risky. You get some of these nonsense penny stocks, and if you dollar cost average to something like that, that can easily go to zero, right? So one of the first things is when you're talking about dollar cost averaging, before you even consider the idea, you have to first know how much you want to invest. You don't invest all your money in at one price, right? So you have to decide this in advance before you even decide what you want to get into. Let's say, so you're like, oh, okay, I want to invest in Bitcoin. All right, how much? And for that number is not going to be the same for everyone, right? Some people may have a couple of thousand they want to invest. Some people may have $20,000-$30,000. Some people may have 100,000. All right, that's all going to depend on you. Now, the second thing is you want to pick an asset that is a solid lower risk asset. Now, Bitcoin is not exactly, I would not consider Bitcoin a low risk asset, but you have to ask yourself, do you believe in its mission and all that stuff? Do you believe in its purpose? And if that's part of your deal, okay, great. You have to have some sort of fundamental belief in the thing. Bitcoin is clearly not a penny stock, right? But Bitcoin going to zero can happen, or go to some ridiculously low price that you wouldn't expect. And I know people are saying, well, man, if Bitcoin went to 10K, man, I'd buy as much as I can. Right. You say that now. But what you have to realize is, in order for Bitcoin to get to those low prices, there has to be a lot of negative news and a lot of negative catalysts to get it that low. If there were all that negative news was floating around, right, chances are you wouldn't go near it. Oh, forget it. I'm not going to buy it now. I mean, this thing's going to zero, right? So it's all about that. Now, what are the chances Bitcoin goes to zero? I think it's pretty low that Bitcoin goes to zero. Something like, the S&P, for example. The S&P will never go to zero. Why? Because they always replace the stocks in the S&P. If a stock no longer meets the criteria in order to be in the S&P 500, they kick the stock out and they replace it with another stock. So the S&P always seems to be bullish, right? Generally over time. It has pullbacks, but the S&P is not going to go to zero. Same with the NASDAQ, right? The Qs or the Dow. They're never going to go to zero because the stocks are always replaced that make up the index, right? So an instrument like that would be ideal for a dollar cost averaging strategy. Because again, if your product goes to zero, you lose all your money. The second thing is you have to be very careful with leverage, right? Now, people with no money, they have no choice and they have to use leverage. But leverage in a dollar cost averaging scenario can be a very bad idea, because Bitcoin can go to 25K or 20K. And if you're leveraged and you're too big at a high price, you're going to get margined out of your positions and you're going to get basically blown out and you're going to take a loss while someone else buys your supply at a great price, right? So I always suggest, if you're going to do that, don't use leverage, or use the least amount possible. Okay, 2-to-1, something like that, right? You don't want to be using 10 times leverage, 50 times 100. That's like nuts. Those leverage amounts, by the way, are more for day trades or intraday strategies, because that's when your risk theoretically should be a lot smaller, because you're in and out of the market for smaller periods of time and you should not be exposed to gigantic moves. That is how you are supposed to use leverage, right? You want to take a small move with a big position. But again, if you're wrong a lot, you're going to lose a lot of money. So that's another story. I'm not going to talk about that here. Let's talk about this dollar cost averaging situation, right? So why am I bringing that up now? If you read my article yesterday, I talked about this situation. Let me make the chart bigger here, okay? So yeah, there we go. So here's the thing. In the article, I mentioned, first of all, this arrow, okay? This arrow that I drew here basically points out my previous week's scenario. I suspected the market was going to do this, right? This line here, and the market completely rejected that idea. And my point was, this is not about being right. And when I do these scenarios, right, like this one right here, this is a scenario. When I draw those, my aim is not to be right. My aim is to basically pick a scenario that the market is likely to show, and then the market has to confirm it. The market decides if it's right or wrong, not me. So I look at a range of scenarios, I narrow a range, and then I say, okay, I think this one has the greatest chance. But then from there, it's up to the market. It's not up to me. Anyone can come up with forecasts. Anyone can. It's not hard to do. You just have to understand some basic concepts. But as far as being right, which is what everyone is obsessed with, well, how often are you right? What's your win rate? Blah, 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 right? Because I want to be rich. That is up to the market. So this is where confirmation comes into play. You can have all the forecasts in the world, right? Chances are half of them will be right, half of them will be wrong, right? Because the market is mostly random, and 50% probability means half the time you're right, half the time you're wrong. So it's safe to say that you're working with a 50% probability of being right most of the time. In order to make money in such an environment, you have to minimize those random occurrences, or try to minimize those losing times and try to maximize the winning times, right? How do you do that? Well, confirmation plays a role in that, because when there's confirmation and the market is saying, okay, I'm agreeing with your idea, there's a greater chance that your idea plays out. That's the whole idea. That's how you do a little bit better than 50%, right? Now, so back to my chart here. I pointed this out because I was wrong, right? The market basically went back into this support zone, right? This zone that we're in right now. And this zone, these two lines here, is a very important support zone because it's been here a few times before, right? And there's a relationship to this low right here. Now, this support zone, as I've pointed out in the previous two times that it was here, is a location to consider investing. I usually don't bring that up very often because usually we're not at such a location. But this is a lower risk location. Why? Because it's a major support. Major support of what, though? A broader bullish trend. So I have a question here in the chat asking, is Bitcoin still in a bullish trend? Based on what this chart says, I would say it is, because look, the trend is, you have to consider the trend from the big picture. This is the big picture. If you're not looking at this, you are blind, okay? There's nothing but higher lows and higher highs, and the highest high was made here way back at what was that? March of this year, right? The 73K high. Since that high, Bitcoin has never gone higher, but it's been consolidating ever since. This entire range that we see here is a consolidation. It's what I refer to as a higher low consolidation. So higher lows typically lead to higher highs in a bullish trend, right? So a higher high would be up here somewhere. So it doesn't mean that it's going to do it right away. We don't know when it's going to break out. But the thing is, as long as it maintains its supports, which generally it is, this support area has not been cleared. It tried. It went to 49K right there. It tried, but it reversed pretty quickly, as you can see. It spent very little time in that area. One day, right? What is this? One candle? That's one day. And then it reversed, okay? Pretty hard. So that tells me that, for one, that's a higher low consolidation. And we keep revisiting the area, right? This is the third time we revisit the area right here. And again, we're recovering. Look at the bullish candles. Now, yesterday when I wrote my report, there was this green candle was in play, right? And there was this current green candle was still forming. And the formation looked like these two little inside bars, okay? At the time, it looked like an inside bar, the second candle. But as you can see, it's not an inside bar. It took out the high of the previous candle. Let me point that out here. I'm going to draw a little square on them. These two right here, okay? These two little inside bars. That's what when I was writing my analysis, this is what it looked like, okay? See those two little inside bars? Now, that could easily have turned into a bearish signal if the low of that first inside bar was taken out. It was never taken out, or if it was like, no, not even. Sometimes it may barely take it out and then reverse. But as you can see, it took out the highs of the inside bars, the highs, which means what? There was no confirmation to go short ever in that situation. So if you were following some moron that was telling you, hey, it's a short, it's going to go to zero, well, you're not listening to the market. You're listening to a moron, right? So if it took out those lows, that would have been the signal. That would have been the confirmation. That's the whole point of waiting for a signal. Now, signals occur on any time frame. So what signals you look for are going to depend on what type of trade you're looking to take, which is something you need to know in advance, right? So for example, day traders look at certain time frames. Swing traders look at other types of time frames. You really shouldn't mix, especially if you're a beginner. You decide either one or the other. And you should decide this in advance, okay? Now, so again, I'm getting to this point of the dollar cost averaging. So we're in a location here that's a high probability reversal location on the bigger picture. So it's a higher low consolidation, and we keep testing the low of the consolidation, right? That's a place where you should be looking to buy and consider investing because it's such a major level, right? Now, let's talk about investing and dollar cost averaging here for a moment. Investing as an investor, right? We're gonna separate now from day trades and swing trades, which are smaller time frame strategies. Investing is a large time frame strategy. You're usually in the market for half a year, maybe longer. So you're in for a long time, which means you're going to spend a lot of time in the market. The more time you spend, the more risk you take, okay? That's why you always get these people who say, well, investors always beat traders. Well, because you sit in the market the entire time. And if the market works out, you look like a genius. If the market doesn't work out, you don't tell anyone, right? That's usually how it goes. When the market goes to zero, we'll forget about that trade, right? But the market goes to new highs, everyone's all out bragging, well, I invested at the bottom, I'm rich now, right? You get those guys, right? So the thing is, you take the most risk. And if you're going to do that because you're in the most time, then there has to be some way to control that magnitude of risk. And you can do that with how you size or how you allocate the money that you're looking to invest. So like I said at the beginning of the stream, you have to first decide how much you want to invest. Now, it could be Bitcoin, it could be Ethereum, but if you're going to do this with like PP coin, then you got problems, because like I said, PP coin can go to zero. All right, that's not a hot. There's no value to that. There's no fundamental value to that coin. It's a nonsense coin, right? So that's not the type of thing that you want to invest in. You want to invest in something like Bitcoin. You want to invest in something like Google, something like Apple, a stock. If you're going to do it with a stock, it's a solid company that's not going to go out of business anytime soon. Of course, there's always risk, but chances of going to zero are low, right? So that's important, because if it goes to zero, you lose your entire investment. Now, so we're going to, for example purposes, let's just say you have $10,000. You say, okay, I want to invest $10,000 in Bitcoin. How do I do it? Well, first thing you have to do is you have to come up with a sizing regime. You have to decide, well, okay, so how much am I going to buy at what time, or when, or where? How am I going to do that? So what you can do, and this is the point of the stream, you can actually weight or control the size of how much you accumulate based on location. Okay, so when we look at the chart here, the larger we zoom out, and we look at the larger time horizon, what we're looking for are lows and highs, or we're looking for supports and we're looking for resistance in light of the trend. Trend is defined by the larger amount of time. So you're looking back a year, you're looking back 6 months or whatever, that's generally going to be your broader trend. You want to make sure you do that, because if you make the mistake of just looking at a move like this, right? Because you're watching, your 5-minute chart, oh, the trend is bearish. This trend is only bearish on small time frames. So as a day trader, this movement right here, sure, that's bearish, and you can be working on the short side of that, right? But you need to be aware of your bigger picture levels, because this broader trend is not bearish. Now, if you notice here, the trade scanner says that the trend is bearish. See that? Trend is bearish. But the trade scanner is not looking all the way back here. It's not doing that, right? It's not looking all the way back here. Here, I'm going to point that out, right? Back here. The trade scanner doesn't look back that far. So the trade scanner is really focused more on this area, like this area right here. And because there's like lower highs in there, it's calling it bearish. But you need to know better than that. Okay, that's very important. I mean, one thing you can do to kind of test that too is you can go to a weekly. If you notice on the weekly chart here, it says bullish. Okay, weekly carries more weight. So keep that in mind. When you're investing, you want to work with the bigger picture trend. You could use the trade scanner in this way if you do not know how to identify or evaluate a trend yourself. You can use that as your reference. But really, you shouldn't do that when it comes to the big picture. That was really meant for smaller picture momentum, right? That's really what that trend mode, or that trend box, it was really meant for that, right? For the momentum on smaller time frames. So if you're going to use it on the bigger time frame, you check one and then check one just above it, just to see what it says. If they're both bearish, okay, but one was bullish and that was weekly, right? Does that make sense? So the larger the time frame, the more weight it carries. So we're going to look at this as a bullish trend in general. And if that's the case, we're very interested in support levels, especially major support levels, not minor ones. Major one is near the lowest point of this range. This is the lowest point, right? 49K. So anything nearby, low 50s, 50K, 51, 52, this zone is going to be a place to be considering investing, right? So we have our location, but what does that mean in terms of size? How does that help us? Well, you have to come up with a general allocation amount. right? So you say, okay, I have 10,000 to invest. When I invest, I'm going to buy $100 at a time. Okay, so that's going to give you a lot of trade, a lot of trade entries over time, right? The second thing you decide is a schedule in terms of time. So you say, okay, on the first of the month, I'm going to buy. On the 15th of the month, I'm going to buy. Hey, Sean, good to see you. Okay, so again, you decide this. You may want to make one purchase a month. You say, okay, in the middle of the month, I'm just going to make my investment purchase, and that's that. An exchange like Coinbase, for example, allows you to do that. You can schedule like a purchase. I've seen that like on the Coinbase, not on the pro thing, not like on the regular section. You can do stuff like that. But anyway, you shouldn't need a tool like that. You should be able to do it yourself and be like, all right, it's the 15th of the month. I'm going to make my purchase. And you have a standard allocation amount. You decide what that is. It could be $100. It could be $500, right? It could be a percentage of your total amount. So let's say if you're working with $10,000 and you say, okay, I'm going to invest 1%, right? 1% is $100. So you could do it like that way. 1% typically means any price, right? Now, and over time, that will give you an average price, right? No matter where price is. And over time, you're going to accumulate an average price. But now here's where location and sizing can really help you. When you're at an attractive location, this is an area where you don't have to consider the typical allocation. You can allocate more. Why? Because you're at a great price. So, would you rather buy $500 worth up here, or would you rather buy $500 worth in this area? I think you guys know the answer, right? So at lower prices, especially levels that are identified, like 50K, that area, you can justify a larger allocation. So instead of $100, maybe you do 500, or maybe you do 250. Okay, or if you normally you do 250 as your standard allocation, maybe you double it and you do 500 this time when your monthly purchasing date comes around. But let's say price gets there now and it doesn't wait for your date, right? The price is there now, or maybe price was lower a few days ago and you're like, it's such a great price. Well, then instead of on the 15th of the month, which was your original plan, you make the purchase at the low or near the low because it's pushing 50K. I'm buying $500, and now you're in for that month. So when your normal date comes around, you don't do anything because you're in for that month. Right? If you pick a date, or you could just say, I'm going to make one purchase a month. It doesn't matter the date. I'm just going to wait for a location. Each month is going to have a high, and each month is going to have a low. Okay. And since we're assuming you're not going to be dollar cost averaging on the short side, you're always typically it's on the long side, right? Can you do it on the short side? You can, but it's not a good idea, especially if you're working with an asset that has a future, right? Like Bitcoin. If you're going to do on the short side, then you pick a garbage coin or something, right? But I wouldn't suggest that. You can get to a lot of trouble with that, right? So we're going to assume only longs. Now, so you're looking at your location, and if the location breaks, you're in, right? You've made your purchase for the month. You have to wait for the next month to make your next purchase. Or maybe you do it every 2 weeks. The point is you have to have a schedule set and you have to stick to the schedule. That is what keeps you out of trouble. That is what prevents you from buying too much too early in a situation like this where it just keeps going and going and going and going. And you're like, man, you may have bought some up here and you're like, yeah, all right, I bought some. And then it goes lower and you're like, oh, I got this great price over here. Yeah. And then next day you're like, man, this is even better price. I'm going to buy some more. Next thing you know, it's here. And you're like, man, I should have waited, right? So that's why you have a schedule. And you may have an opportunity in between your schedule. But let's say, for example, you tried that. You bought some here for whatever reason, because you weren't waiting for a signal. When you're dollar cost averaging, you're not really waiting for signals. You can step in front of whatever you want because you're using the size to control your risk. Because you have, again, 10,000 to allocate. And you're doing $100 typically. So if you're at a bad price, typically at a bad price, like a high near a resistance, but you can't resist because you have to be in some, right? You buy $100 worth because the risk is higher for longs at resistance levels typically. But if it breaks out, you still bought your allocation and you're still in it, right? So either way, you're managing your risk, and if it continues your way, you at least have a piece of it, and you're accomplishing your goal, which is to accumulate $10,000 over time. And then eventually you'll have your $10,000 allocated, and hopefully your average price is going to be weighted way lower than where the market is, in the future, because you're putting on larger positions at lower prices compared to higher prices. Does that make sense? Compared to just buying $500 at any random price. I bought some here, I bought some way up here, I bought some at the high, because that's what people usually feel like investing is the safest, at the highs, which is actually the opposite. This is the worst place to be investing, the highs. Okay. And anyone that bought at these breakouts and all that stuff, I just bought $50,000 worth, right? Now they're just sitting here hoping it comes back. It might, but the thing is, they assumed a ton of risk that was unnecessary. And that will eventually come back to bite them, because if Bitcoin breaks, right? Again, Bitcoin may break. We don't know. Right now it holds. Okay, it's doing what it should do, and there's a buy signal right now in here. Okay, there's a buy signal. If this thing happens to turn around, right? Maybe like on CPI or something or whatever, some report causes some kind of surprise. Next thing you know, it's breaking this low. People that bought the top, they're stuck in this thing. And they have to hope that they just don't get margined out. Hopefully they're not over leveraged, right? And they took the most risk. That's completely unnecessary. If you do dollar cost averaging in terms of sizing based on your location, you shouldn't find yourself in that situation. If you bought $100 worth a bunch of times up here, okay, and it's here on you now, what are you in $500 or $600 maybe a little bit more, less than $1,000 is at risk at this point. And then you're at the bottom, you're like, all right, you're not really feeling much pain. Okay. Now, of course, the opposite of that is it breaks out and goes to 100K, and you're like, well, I'm not making much money. Right. But you can't focus on the money part. You have to focus on the risk part, because, you don't go out of business making money, even if it's a little bit of money. Right. Like they say, you don't go broke taking profits. You don't go out of business. You don't wipe yourself out, even if you make a little bit of money. But you wipe out when you lose a ton of money, which is very easy to do if you get too big too fast. And that's a common problem when it comes to dollar cost averaging. Okay. Now, does that make sense, you guys? Now, this may be basic for a lot of people. Let me know if you have questions. Because again, I'm not really talking about the Bitcoin analysis here. I'm really talking about how to invest in this in a way that you have some sort of framework to go by. Okay, so again, just to recap, the first step is how much you want to invest. The second step is you have to know where you are in the trend. Okay, you have to kind of get an idea. Are we near a low? Are we near a high? And what is the trend? The trend should be bullish. Okay, but if you're in something that's bearish, then you should probably hold off or invest smaller amounts, okay, until the structure starts to change. Like you may have a stock, for example, that's in a bearish trend for the moment, or maybe it's been pulling back for a year or two. There are many stocks that look like that, by the way, but you like the stock, you want to start investing in it, right? But there's nothing good about the chart. Okay, it looks horrendous. It's still bearish. All right, no problem. You could start investing, but you go small. You don't go big until the structure changes. It may take a year for the structure to change, right? So you wait until the structure changes before you start investing more. You just go smaller if it's making low after low after low, because you don't want to take a chance on something like that until it shows stability, until it starts showing higher lows and higher highs and starts breaking resistances. And if you're averaging in over time and the trend happens to change, you'll see it. And then you'll still have money on the sidelines to invest as it's going your way rather than going against you the whole time, right? Which is the mistake that everyone makes. You're better off investing. You're not getting the best prices, but you're better off investing in something that's going your way than investing in something that just keeps going against you more and more and more. Now, what I just said can be very confusing and conflicting for people when you have a situation like Bitcoin here, right? And you say, well, I keep investing at these highs and it just keeps going against me. Right. Well, you're still on the right side of the trend generally. You're just investing at bad prices. Okay. Just because the trend is bullish doesn't mean it's not going to do one of these consolidation phases. This happens all the time. Gold consolidated for like 3 years before it broke out. And if you were buying the high every time, you got stuck at a bad price every time and most likely shaken out, especially if you use leverage. So you look at these lows, and these lows give you reference points. Okay. Like again, you may have bought some here. Okay. I remember when we tested over here, I think it was back here, we talked about it on a stream, and I know some people here on the stream bought there. Okay. There was another opportunity to buy again, as you can see, right? In this area when it touched 49K. So if you're accumulating in this general area, eventually it works its way back up into these resistances, and now you're looking at a profit. At that point, you can also decide to average out just to lock in some profit, which is, again, another mistake that people make. They don't get out. They just stay in it because, like, well, I'm in it, why am I going to get out of a winner? You don't have to get out of the whole winner, but it's not a bad idea to take something off the table at resistance levels. Just lock some in, because when it pulls back, you can buy it back, right? I know it's easier said than done, but, look what happens when it gets to these resistance levels. Imagine if you just took something off the table and then rebought it at a lower price. And then when he retests again, you just take something off the table, and that's all you're doing. You're just taking a little off the table each time. Eventually it'll break out and you'll still have a supply. You'll have some inventory and you're in. So you got to be proactive in that sense. If you think investing is just, I'll just buy and check it in 5 years, you can do that, but there's going to be a lot of opportunities that you're going to, that you can capitalize on, that you're just going to, ignore. Okay. Just locking in a little profit's not a hard thing. And eventually it will pull back. Nothing moves in a straight line, right? And it enhances your returns over time. It's very similar to selling a covered call. All right. I'm not going to get into that right now. Hey, Alex from Romania. This is Alex, the moderator I was talking about earlier. All right. So any questions about this? I know it may be very basic for some people. Any questions? It's an important thing to talk about. Oh, he's in here from work. Okay, great. Good to see you. It's important to talk about when we are at attractive levels for investing. We don't get to these levels very often, right? I mean, going back all the way to July, we were in this area once, right? Twice, okay? Twice, and number 3 is over here. See that? Number 3. This is the 3rd time right here. So we don't get into this area very often. So when you do get into the area, you want to be aware of it. And if you're interested in investing and you have the amount that you were planning, this is, again, a situation, even though the market's up a bit here, as you can see, the buy signal occurred and you have a nice strong candle, you're still in the investment range. Okay, you're never going to get the exact bottom. So you don't have to worry about that. You're trying to allocate over time. All right, maybe you want to, maybe this thing pulls back over the next few days. I don't know. But once you make your purchase for the month, you're done, no matter what the price does. Because again, markets are highly random. It's the general location. So something strong, it's nearer a low, you want to start to buy some. If it never really gives you your good prices, but you come to your allocation day, you buy your typical amount, which, like I said before, is the smaller amount, $100 in this case. If you're pushing highs and you want to get into, you can go even smaller, $50 if you want to compensate for the risk. So to give you a formula, the greater the risk, the smaller the size. The smaller the risk, the greater the size. We're assuming that lower prices or support levels are going to be lower risk compared to resistance levels, even though the trend is bullish. Okay, does that make sense? So you have to have some sort of framework like that. Otherwise, you're just investing like randomly, which is what a lot of people do. They do it on a hunch. They say, "Oh, I got a couple of $1,000s on the side. I'm just going to throw it in, whatever." And then if it's working well, they brag to their friends, and if it's not working well, they don't tell anyone. Like I said before. So don't be that kind of person. That's the typical herd, and they usually make the mistakes, the herd mentality mistakes. And those are the people that we make money off of, right? Because they're just reacting and they're always at the mercy of the market. You do not want to be that person. Remember, the retail trader's job, their purpose is not to make money. We all like to believe that. That's what we're told. The purpose of the retail trader is to make others rich. So please open your eyes to that and stop making other people rich. All right. So we good with that? Okay. So any other questions? So speaking of making other people rich, let's talk about the Trade Scanner Pro. All right. So if you have any dollar cost averaging questions, let me know. You can do this again. I show Bitcoin because Bitcoin's at a good price. You could do this with Ethereum because I haven't checked the Ethereum chart, but I'm sure it's near the same price. Okay, it's in the same kind of situation. You could do this with any market that, again, you believe in for the future. Don't do this with extremely high risk penny stocks and nonsense coins and all that other stuff, bad idea, okay? Because they can go to zero. You want something that you believe in the long run. Bitcoin is, at least, while I believe it's highly risky, I do believe it has a future, and it hasn't been made obsolete yet. You know, keep in mind, one day someone may come along and say, hey, I got the best version of Bitcoin here, and Bitcoin becomes obsolete. That hasn't happened yet, although there have been many claims that some coins out there are more efficient or better than Bitcoin. They're cheaper, they're faster, blah, 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 blah. Yet Bitcoin still is the leader, okay? Maybe because it was the first one on the block, and usually the first one is the one that everyone recognizes, and no one cares about Monero. No one cares about, you know, these other ones that claim to be a better version. IOTA, right? No one cares. So anyway, all right, let me know if you have questions. Now, let's talk about the Trade Scanner Pro, okay? Now, by the way, if you like the video, please press the like button. Please subscribe. Like I said before, the purpose of these videos, the reason why I do them is to give you training on how to properly forecast so that you can use the Trade Scanner Pro most effectively. Consider this a free training session. Each week, I come here, I stream. The first 20, 30 minutes, I do what I just showed you here. I talk about Bitcoin, we do analysis, we talk about stuff like that, right? And today's topic, again, was the dollar cost averaging. But then the second half of the stream, I typically go into the Trade Scanner Pro. And this is where I teach you how to use it effectively, okay? So if you can't make it at the time that I stream, then watch it after the fact. You can watch, you know, press the like button, press the subscribe button, and then watch it at your convenience. Now, let me explain to you how the Trade Scanner Pro works. First, I'm going to change this chart here, and we're going to go to Bitcoin. Hold on, I'm going to change it because we're on Coinbase right now. I'm going to change it to Bitcoin Perp, right? It's a perpetual futures contract. And I want MEXC, right? Okay, MEXC. So we have the same, we have matching charts, okay? Now, let me explain to you how this thing works. Hey, Inertial Dataholic. Hey, what's up? Good to see you. All right, thanks for stopping by. I like your name. All right, so let me explain to you how this thing works, right? So first thing, the Trade Scanner Pro is a confirmation tool. It's not a forecasting tool. I think a lot of people who sign up for it, they want it to be magical. They think it's going to grow their hair back and they're going to lose weight and they're going to be better at dating and all that kind of stuff. No, that's not the case at all. It's not a magical miracle tool that's going to solve all your problems. It's a forecast. It's a confirmation tool, not a forecasting tool, which means you still have to do a little bit of forecasting. All right, but the thing is, the forecasting part is the easy part, like I said before. The confirmation part is the hard part. That's the part that takes years to learn and this and that, whatever. Forecasting, you can learn that in a few weeks by just watching me here. All right, but that's an important part because you need to arrive at an idea before you can use a Trade Scanner Pro. If you're a beginner and you think, like I said before, oh, I'm just going to figure this out, right? And you just jump on any signal that pops up and you don't have a premise, then you're basically playing a slot machine. It's random, and your outcomes are not going to be good. They're going to be random, especially if you're fooling around with the counter trend mode and you have no idea how to do that. If you're a beginner, I would not recommend counter trend mode, right? Because it's low probability right off the start. You have to really understand what you're looking for before you can use something like that. All right, so anyway, before we talk about all those details, let me explain to you how it works. So the Trade Scanner Pro is a trend following momentum reversal system. It's based on a system that I use to take trades, particularly day trades and swing trades. So here's how it works. First, it identifies a trend. Let's say the trend is bullish, okay? And here, let me make this bigger here. Let me make this chart bigger. All right. And so let's say, let me start this over and move this out of the way. So let's say the trend is bullish, okay? Bullish trend looks like this: higher lows and higher highs. It identifies that first. Then it looks for a pullback in the trend. So in this case, it's looking for a bearish pullback. Once the pullback appears, it measures the momentum of the pullback. When the momentum reverses and changes back to bullish, typically looks like this, and then a signal will appear. The signal appears in the form of trade suggestions. So you typically have a stop loss, okay? You have an entry price for a bullish trade in this case, and you have a take profit or a profit objective, which is typically up there. The ratio between the stop loss and the profit objective is 1.5 to 1. That's how it starts out. That number is right here. You can see that right there. This is 1.5 regular, right? I'll explain all that in the settings. But the thing is, that's where it starts out by default. And that means that for every $100 that you risk, you're looking to make $150. If you follow that over time, that's going to help you have a positive outcome if you respect the orders. Now, on top of that, we have something called a trailing stop. And if you watch the trades over time, right, you'll see a trailing stop appear. And as the candles close, the trailing stop will begin to follow the trade. Eventually, if it goes your way, the trailing stop goes to break even. You have a risk-free trade, and it gives you the opportunity for the trade to continue beyond the take profit, right, the profit objective, and it allows you to capture a much greater reward risk. Sometimes you have a situation like this. If you watch my previous week's stream, I had a trade, right? It was a holiday, and I picked up a trade, and you can see it on the video. It was on a 15-second chart, and the initial risk, again, this was unusual, but the initial risk was 25 points on Bitcoin, and I caught a runner, and the runner was 400 points. Okay, you could watch the video. It's still there. And that was like a 20 to 1 reward risk. Again, it was a very small time frame, not something I recommend, but there happened to be a move, and I happened to be in it, and the random nature of the market took over, and there was nothing for me to do but let the market ride, right? And I was able to capture that. So that is what the trade scanner allows you to do, and it gives you a visual reference for all of that, right? It's a very powerful tool. Now, let me show you real quick the settings before we get into looking for a trade. Here's the settings panel. When you first sign up for the Trade Scanner Pro, it looks like this. And you can sign up for 14 days, and it's free. Now, I see people who cancel, and when they cancel, that just leads me to believe that they don't see that they're not using it properly. Because, man, let me tell you, this thing really can help you if you use it right. Now, inside of this panel here, you have a few boxes, a few of these settings. You could change all these colors if you want. That's for more advanced traders. You don't have to mess with those colors if you're new. You also have the speed of the trailing stop. Again, that's this over here. I would not mess with that if you're new. That's for more advanced traders. So you could leave that alone. You want to turn on the trailing stop, okay? You want to turn on the show previous trades. You want to turn on the heads up. You'll notice here there's something called counter trend. Okay, that's over here. That's not something you want to mess with right away if you're a beginner, because counter trend, let me just explain to you what that does real quick because I forgot to mention it. Counter trend, when we're looking at the market, calls trades. I'll show you what it does. When in a bullish trend, for example, right? This is what the bullish trend looks like. Counter trend signals will appear here. So the trade scanner will ignore the trend and it will just call a momentum reversal. So that's great in certain situations, but it's lower probability in general because you're going against the trend, right? On your current time frame. Trend is defined by each time frame. So you don't exactly want to do that, especially randomly. If you're going to do counter trend, you want to make sure you do it at a level. So as I tell people, there are really two types of trades, right? There's trend continuation and there's momentum reversal. There's trend reversal. So there's continuation and there's reversal. Those are basically the only two things you're looking for. You can also have a random trade, which could be either one, right? So we're trying to minimize random and we're trying to anticipate continuation or reversal. Now, what is a continuation? A continuation can be, for example, a resistance break of a bullish trend, because resistance typically should incite selling activity, right? And the market should pull back. But in a bullish trend, a higher high is likely to appear. So in the case of the price momentum, most likely you're looking at a continuation. That could appear as an inside bar. That can appear as a few things, right? And the Trade Scanner Pro can at least give you the confirmation for which one you're looking for. Now, the Trade Scanner Pro looks for pullbacks, typically, right? So it's looking for a continuation after a pullback, as opposed to a reversal of a trend, of a support or resistance. So when you're dealing with a reversal, usually you're looking at a larger time frame and you're trying to synchronize your smaller time frame with the larger time frame. I know that may sound confusing, but we'll talk about that. All right. So Again, this is your time. This is your time to ask questions and to learn how to use a Trade Scanner Pro. As you can see here, I turned on all those features, right? You have this, like, this is a historical trade right here, that little green arrow. If I roll over that, it shows me the result of that trade, which is really cool. That's a recent update that Steen put on this thing. This one right here, this was a losing trade, this one. That's what it says. Take profit was 72.23. Oh, that's because this is a daily chart, right? This trade was in play for quite some time, and it got stopped out here. When it pulled back, I guess it got stopped out. We can replay that, actually. If I go to the replay and I go here, this is a really cool feature of TradingView, by the way. The free version, you can do it on this time frame, but the paid version, if you want to do it on smaller time frames, you need the paid version. Okay, so if I advance this forward, you can see the trade develop. See, look, this is what the trade looked like. Okay, see that? Look, you have your stop here. Now, keep in mind, this is a daily time frame, so the risk is going to be pretty high on this. Look at the risk, right? The risk here is 6,900 points. Yeah, that's a lot. 6,951. That's almost 7,000 points. That's ridiculously high. I would not do that, especially you're not going to do that with size, right? But your take profit is way up here, right? So your risk was 6,951. But your profit objective is 10,482. You're like, oh yeah, that's what I want to make, right? But look at the associated risk; it's very high. Okay, but if you want to work on this time frame, that's up to you. There was a signal there. Now, if you watch how this signal played out, you have to take some pain. If you took that signal initially, right, not looking good there. You're taking a few thousand points of pain. Look at that point. How much pain is that? You bought at the blue line, right? So that's 5,400 points. That's what everyone saw. I'm canceling this. This thing sucks, right? That's when everyone cancels. And then what happens is this thing starts to fool around, goes back to the entry price, and then it starts to show profit. Oh, this is when everyone signs up over here. Oh, I'm buying this thing. This thing is magical. Help me grow my hair back and all that stuff, right? Okay. So, but as you can see, it's all over the place. This is the daily time frame. Okay. And at one point, let's see where it stops out. That's where it stops out. So this was your highest profit potential right here. It never even came anywhere near the profit objective. So you have to manage that. Now, the good news is you don't have to do this on daily timeframes. That was just a daily example. The numbers are very big on that. The idea and the reason why we developed this thing is really more for people to work on smaller timeframes, like 1 minute, 5 minute, things like that. All right, now if you notice over here, we have all these green columns. You could turn those off, by the way, but what those are is they're highlighting these orange candles. Orange candles are what we refer to as heads up. Heads up lets you know that a signal is coming soon, right? In the next 3 to 5 candles, typically. You don't always get the heads up, but when you get it, you're preparing for a signal. This is especially useful for day trades when you don't want to sit in front of your computer. And when you get a heads up, it doesn't guarantee you're going to get a signal either. You may not get a signal, but it gets you prepared so that you know one is likely to appear. Okay, so this is the daily time frame. Now, let's turn this off. I showed you an example here. We're going to change this now. We're going to go to an hourly time frame. Now, when you're dealing with the Trade Scanner Pro, like I said before, you have to decide what type of trader you want to be. In fact, I made a whole video about the steps to use this thing properly. If you go back on if you go back on the YouTube channel, and it was back in July, 5 steps to better trade setups or whatever, better signals. In those 5 steps, I basically show you what you have to go through to align your idea and then use the Trade Scanner Pro for confirmation. So basically I'm going to show you that here, but you can watch that video in more detail. Now, you have to decide, again, are you going to look for day trades or are you going to look for swing trades? You must know this in advance before you even turn this thing on. If you're a beginner and you, like I said before, you just think you're going to turn this thing on and you figure it out. Just don't waste your time. Let's not waste each other's time because you're not going to get anywhere with it. You have to do a little bit of forecasting. So before you can do forecasting, you need to know what you're forecasting for. So you need to have a time frame defined. If you're going to be a day trader, you're working between 1 minute and 15 minutes, something like that, anywhere between those time frames. If you're a swing trader, you're looking at like 15 minute and above, usually 30 minute, hourly, 4 hour and above, right? That's swing trader. So for the example today, again, I'm going to be a day trader. I know this going into this in advance. from bigger picture support in smaller time frame. I'm not sure what you're saying there, Lad. Oh, wait. Oh, Lad is saying something here. So counter trend can be used at bigger picture support area. Yes. Then it's more probable trades for trend reversal. Okay. Yes, that's correct. So what Lad is saying here is counter trend can be used for bigger picture support. That's a great example because you're expecting reversals in that bigger picture support, right? But how do you confirm those reversals? You can go to a smaller time frame. Why would you go to a smaller time frame in the bigger picture support area? So when we say bigger picture, let's say 4 hour, you're at a support on a 4 hour chart, because the risk is higher if you're wrong on the 4 hours. So you say, well, I don't want to take 4 hour risk. It's too high. It's like 1,000 points. So you can reduce that by working on a 30-minute chart and waiting for a confirmation there. Your risk on a 30-minute chart is going to be like, 200 or 300 points, much better than 1,000. And you say, oh, I'm looking for my confirmation. But the thing is, you have to align that smaller picture with the bigger picture. So let me I'll just mention it real quick. If you're at a bigger picture support on a 4 hour, in order for price to get there, your trend on that time frame most likely is bearish on your smaller time frame, right? So if you're looking for a long at that bigger picture support, you have to reverse you have to change the trend that you're looking for, and you go to counter trend. Because if your trend on your smaller time frame says bearish, it's not going to call long signals, but you're at a major support and you want long signals. So that's why we set up counter trend mode. So you can get long signals in an environment that looks bearish, but is not really bearish because the bigger picture is not bearish. You're at a support level. You're expecting a reversal. You've done some forecasting, right? You have to do some forecasting before you can arrive at that idea. All right. So I hope I'm not confusing people. If I am, please don't be shy. Ask questions. That's what we're here for. This is a training session. Okay. It's not just me lecturing. It's me. I want you to be comfortable with these ideas because you need to be in order to use the Trade Scanner Pro. So now in my example here, I'm interested in a day trade, like I said. So that's going to determine the time frames that I look at and how I judge my levels or how I forecast. So if you notice over here on this side, I'm using an hourly chart. I'm using this hourly chart because I'm trying to basically determine a couple of things. I want to know the general trend and I want to know the levels. This is going to be important for how I formulate my idea. Okay. So the trade scanner up here says the trend is bullish. Okay. I can believe that. All right. Is it bullish though? Let's see. I mean, if I evaluate it myself, I see a higher low over here. It's a higher low, higher highs. Okay. For my day trade purposes, this structure right here is a bullish structure. That's a bullish structure. Okay. So I will agree that the trend is bullish in that case. Now, so that's one piece of the puzzle. Hey, another guy from Romania. Maybe you know Alex. All right. So trend is bullish in this case, but what are my levels? So I have support over here, right? I have an old resistance, new support over here. Okay. I have what's going on over here? I have a support that's broken over here. I have a resistance over here. And I have another resistance up here. Interesting. So these are levels that are going to be important for day trades, nothing else. Don't mix this up with swing trades. Don't mix this up with investing. This is only for day trades. These levels are going to be relevant. Okay. So we are at a resistance, are we not? So we are at a resistance in a structure that looks bullish. So this is a little bit of a conflict here. This is going to be a little tougher to figure out. What do I do? Well, the trade scanner has been calling shorts all over the place, and they haven't been working clearly, right? I mean, look at this one right here. This one, that was an 834-point loss if you took that short and it reversed in your face, okay? But the structure is bullish. And look, that sort of came off of a resistance. It called the short like around here somewhere, and then you get a conflicting candle. So you got to be aware of that. We are now at another resistance area. We got a red candle developing. What time is it? So the new hour just started, right? It's just after 4 o'clock here. So this candle, this hourly candle is brand new. That's important to be aware of because it may take out the previous candle's high, which continues this momentum higher, even though I'm at a resistance. So this could be an opportunity for continuation patterns, right? Is what I'm trying to get at. If I'm going to work with continuation patterns, I now look at my smaller time frame. In this case, I'm showing you a 15-minute, right? But we're going to switch this to a 1 minute because I'm looking for day trades. And on my 1 minute, let's turn on a couple of things here. So everything is turned off. I'm going to turn on my trailing stop, show previous trades, heads up. Now I'm going to stay in trend mode. I'm not in counter trend mode. I'm in trend mode because I'm looking for pullbacks, right? Because we agree that this trend is bullish. Now, the thing is, we're at a resistance. So where do I get my pullback, right? Do I get my pullback like up here somewhere? And then do we continue higher? Like there's like a pullback that's sort of occurring right now. And you say, there's no heads up, there's nothing, right? My heads up is on. I got no yellow candles. I got nothing here. What's going on? Let's zoom out a bit. What's going on? The most recent trade was over here. I got a heads up over here. It's been quite some time since I've seen a trade. Was this trade positive? Let's see. Yes. This is a 302-point profit right here. See that? That's what that says. If you had taken that long. So this thing is trying to work its way higher. So that's one option we have. We can wait for a continuation pattern, anticipating that the resistance gets cleared, because in a bullish trend, supports typically hold, resistances typically break, right? Now, that's the conservative way to look at this. If I'm aggressive, I could say, well, I'm going to go for the short because we're at a resistance. Okay, you can do that, but this is not exactly the best place or situation to be going short. It looks nice right now because, you're pulling back. Right, but the thing is, your probability is better if you're looking on the side of the trend. Okay, if I go short, if I short this, it's tempting. I understand, but if I short this, I'm asking for trouble. Okay, if we were in a bearish situation and we were at a resistance, then that would make more sense. Okay, or if I was trying to align with a bigger picture, for example, counter trend in this situation, if Bitcoin pulls back dramatically on the hourly chart and pulls back into this support right here, this trend on my 1 minute will most likely be bearish. And that's when I would be looking for counter trend mode right there, because I'm trying to align with the bigger picture. Just like Lad explained earlier, I'd be looking to align with a signal there. Do you understand that? That's very important for using the Trade Scanner Pro. If you don't understand that, you're going to use it improperly, and you're most likely going to just jump at whatever signal appears, and you're not going to make money, and you're going to just waste everyone's time, right? So that's what I mean by forecasting. Trend is bullish. Your first step is done. Second step, where can we pull back to? This level right here. Will we pull back there? I don't know. But if we do, the question is, if we pull back there, this would be a place to be looking for counter trend longs on your 1 minute, right? On your 1 minute, because you're trying to align your 1 minute with the bigger picture. Does that make sense? Let me know if it doesn't. Let me know if you're confused. So how do I deal with the situation right now? I have no signals right now. It looks like I'm getting a lower high off of this resistance area. I mean, again, I'm tempted to short it. Let's see if there's what the counter trend mode says. Let's just turn it on just to see. Is there anything there? Oh, look, there's been lots of attempts to go short. See that? Lots of attempts, and they all failed. Look, this one right here. This one lost 145 points right there. See that? That was the most recent attempt to go short in counter trend mode. Now, you may be saying, oh, you're lower high, right? All right? But again, before you get obsessed with the short, this structure is not bearish. So going short is obviously low probability. Look at all of this evidence. So I should probably be working on the long side. And in this case, that's what I'm going to do. So I'm going to turn off counter trend mode. I just wanted to see like what it said. So now I'm back in trend mode, which means it's going to look for a pullback and it's going to give me a long. Now, there are situations, if we go back here, right, we go back, how long has it been since we got a signal? Let's find out. So when I measure this time, I'm measuring the time here. That's 123 bars or 123 minutes. So that's what, 60 minutes is not, that's 2 hours. 2 hours. We have not seen a signal. In 2 hours. You want to sit in front of this chart for 2 hours? I don't. So you could set up a notification, right? If you don't have time to do that, you could set up a notification right here, right, on TradingView. Now, if you have the free version of TradingView, you can only set up one of these, right? You pick your thing here, right? You pick that here. It will tell you then when a heads up appears, right? It'll give you a pop-up, however you want the notification to be delivered. You choose that here on this menu for TradingView, okay? And then you go about your business and you wait for the signal. Imagine, so if you had done that 2 hours ago, you're still waiting. There's nothing for you to do. Don't sit in front of your chart for 2 hours. Now, the other thing, though, is let's say you're more aggressive. Oh, wait, where I was going with that. If you pay for a premium version of TradingView, then you can set up more notifications. All right, so please keep that in mind. The free version, you can only set up one. The paid versions, you can set up more than one. Now, so let's say, like, all right, but I want to trade now. Okay, all right, you're asking for trouble, but okay. So what do you have to do? We're working on a 1 minute here, and there has not been a signal for 2 hours. So my only choice in a situation like this is to go to smaller time frames. Now, this is not something I recommend for beginners. In order to get sub 1 minute time frames, you have to pay for a more expensive, I think you need the most expensive version of TradingView. So if you're on the free version, you're not going to be able to do this. But that's why I don't like to show it, but I want to show you a signal. So now look at this. When we go to the 30-second chart, I mean, there's a few signals here, right? There were two much earlier. How many, how long was this? Let's see. How long have we been waiting here? 142 times 30. So what is that? So it's 100. It's not 142. It's like 70 minutes. So it's like an hour. Okay. So we haven't seen a signal on the 30-second chart. It's been an hour. That's kind of long to wait. Let's check a smaller time frame. Let's go to a 15-second chart. Okay. Now look, there's way more signals on the 15-second chart. You see that? I don't recommend this time frame, but you want to find a signal, and the market's not delivering one on your 1 minute. This is where you're going to find the signal. Now, as you can see, these signals are very brief. They don't go very far. This one was a profit of 103 points, right? That was the most recent signal. No, actually, no, this one was. How much was this? That was a loss of 20 points, right? So look at that. Loss of 20 points. This one was a profit of 103 points. Okay, so you're still green. How much? How about this one? What was this one? 92 pip profit. Okay, all right. Okay, so far you're in the green. This one, profit, 75 points. So you kind of get an idea of what's realistic here. So 3 of these were green, and this one was a 20-point loss. So do you see, like, that would put you ahead if you took all those signals. So look, we got plenty of warnings here, plenty of heads up. We got some recent heads up here. We may be getting a signal soon. I'll wait for the signal because, again, I'm looking for a continuation signal. Now, notice something. What does this say? Let's see if anyone's listening, because I know I have, like, most people here are bots, right? Most people here aren't real. I only have like 3 people watching. What does this say up here? Who wants to answer that question? And Steen, you're allowed to answer the question. What does that say up there? This is a great example of what Lad was asking earlier. What does this say? I'm a bot. Okay. Secretary Booty Cheeks. Cool. I wonder if you're the same as UTXO. He's also a bot. Maybe you know each other. Okay, cool. So the trend is bearish, right? That's what this thing says, right? Okay. Now this is a 15-second chart. So let's do some puzzle solving together here. How do I get bullish signals here? I want bullish signals. We just finished talking about bullish signals, right? And I'm just not getting enough of them on the 1 minute. I want them here. How do I get them? Because I'm not going to get them if this says bearish. Counter trend mode, Steen says. Correct. This is where we switch to counter trend mode. You switch to counter trend, and now I'm aligned with the bigger picture. I'm aligned with that 1 minute situation, right? And look at all this warning. Okay, so this thing is going to give us a signal soon because now I'm aligned. You see that? Counter trend mode. Now, if you find that confusing, I can't be switching these modes. Okay, no problem. Simply wait for the trend to turn bullish again. On a 15-second, that may take, 10 minutes, 15 minutes, but you wait till that turns bullish and you wait for a signal. It may take again, some time. We're not going to sit here and wait for that, but that's your more conservative choice. This is why I say earlier, it helps if you have some experience using this tool. If you are absolutely new, you've been doing this a couple of months or whatever, and you think, oh, I know enough. I know. You don't know enough. You need to learn the specifics of this tool. There's our signal, okay? We were waiting for that. So let's take a trade. I'm going to take 2 contracts. This is on paper, by the way. I don't trade real money at 4 o'clock in the afternoon, on a weekday when the stock market's closed. So I took this trade. Okay, it popped up pretty quickly, right? Now, we were prepared, though. We saw those heads up, so we knew something was coming soon. We know that we talked about the bigger picture. See, what time is it? Okay, it's 4:15. So I think the stock market just officially closed, right? The futures just officially closed, I think, or is that 4:30? I'm not sure what time they officially close, but usually when the stock market closes, Bitcoin can get these little unusual movements. Again, I'm on a 15-second chart. Movements are going to look very dramatic on this chart. So they're not as dramatic as they look. I took this counter trend. I looked for a long while this trend is bearish. So understand, I am not playing this time frame. I'm playing the trend on the bigger picture time frame. I'm trying to synchronize with the bigger picture. That's the whole point of counter trend. So if I show that chart, right? If I switch this to a 1 minute here instead of an hourly, I switch this to the 1 minute, right? What I'm trying to do here is I'm trying to buy this pullback on the 1 minute, right? I'm trying to buy this. I'm trying to synchronize with that, but I'm using a 15-second chart to do it. My risk is very tight on a 15-second chart. Look at this. This is my risk. What is that? 41 points. That's pretty good. 41 points, right? Usually on a 1 minute, you're looking at a couple of 100 points, 150 points, whatever. 41 points is nothing. Sure, it can easily get stopped out. It's very tight. The profit objective is also very tight, right? This is going to be like, I don't know, what is that, 70 points or something? 60 points. 60 points is the profit objective. Now, here's the thing. Do I have to blow out of my position at the profit objective? No. When I'm in such a small time frame and I'm trying to align with the bigger time frame, if we get a sustained move on this larger time frame, right? If we get something that looks like this, we get a sustained move, right? We get something like that, then that is going to give me a runner on this time frame here. And that will go beyond this profit objective. And hopefully my trailing stop will keep me in for a bigger move. Do you see how that works? So again, this is what you need to know to use this. What I'm showing you here is a little complicated, right? But it's not hard to learn once you understand what you're looking for. So we're looking for longs here because we see that on the bigger picture. Right? I'm not getting fooled into shorting something that's generally bullish. This is a higher low. You say, no, it's not. You got a lower high. It's a lower low. Right. Well, yeah, we can argue that this structure is a lower high, lower low, but you are then missing the point of this structure, which is bigger and dominant. Look at this move while I'm sitting here talking. See what I mean? So we were prepared for this. Now, the trailing stop has appeared. See the trailing stop? It's at the very bottom. Oh, there it is. It's going to start following the trade upon each close of the candle. So every 15 seconds, this thing is going to move higher and higher. Now, we're nicely beyond the objective. I'm going to close one because I like to do that. I like to take profits. So we're going to take one off the table, sell one. So I locked in one. All right, so I made like 60 bucks there or whatever. All right, no problem. And I'm going to hold on to one. And I'm going to see if I could use the trailing stop to ride this winner. Okay. Now we can look, the 1 minute. Look at this. The 1 minute just gave us a signal. The 1 minute gave us a signal here. The 15-second got us in a little earlier. Okay. Now the 1 minute gives us a signal. That was a signal we were looking for originally. Okay. I mean, I can add on that if I want. I just sold one. Right? If I had seen, I wasn't looking, but I'm going to add it back. I'm going to buy it back. All right. I'm buying that based on the 1 minute. My original purchase was on the 15-second, as you saw here, but then my 1 minute goes off. Okay. You can have overlapping signals like that. Don't be confused. We were originally looking for the 1 minute. Okay. Look at my trailing stop now getting aggressive here. Look at that. So this trade theoretically is risk-free if I respect the orders, right? The trailing stop. So I just bought my second one based on the close of the 1 minute, and let's see where it goes, right? If we reach the 1 minute objective, which is actually this resistance level here, the blue line is a resistance level that I evaluated earlier. Remember, we were doing a little forecasting. If we get up there, I will definitely sell one because I want to lock in, profits. I want to lock in something. That's why I have two contracts so that I could ride a winner, right? I can lock in one at the profit objective and then let the other one ride. When I had done that the week before, I locked in one for I think it was 35 points or something like that. And then the second one was 400 points, okay, which I never, ever would have locked in if I was just trying to analyze the candles. I was just using the orders and letting the orders do the thinking for me. If you notice at this point, my analysis portion of this trade is over. I'm no longer analyzing, right? Now it's my job is simply to follow the orders. So this is happening all very fast because I'm looking at a 15-second chart here. I recommend you do this on a 15-minute chart, and all this happens a lot slower. So it's a lot easier to make these decisions. Here I have to act very fast on things. We touch this trailing stop, I have to blow it out. Okay, at least one of them, because that was the original trade that I took. And then the second one, I'll hold on until we reach the stop on the 1 minute. So now I'm essentially working with two time frames. So things are getting a little complicated. I don't want you to be confused. All right, so I'm going to blow out a one if I have to here. If this thing takes out that trailing stop, I'm going to get out of one because that's the plan, right? The idea here now is I'm no longer thinking. I'm just following. Okay, I'm following what the market tells me to do, what the orders tell me to do, and the orders are based on price action. Okay, you see how that works? So again, these candles are going to be very jumpy. It's a 15-second chart, so we're probably going to get tapped out. There we go. Oh, wow, look at that move. All right, time to get out of one. I'm not going to hold on to that. Okay, I still have one based on the 1 minute. Now, here's a little thing. Here's a little advanced trick I can show you. We came back to the entry price on the 1 minute. Notice the blue line? So if I get another green candle there on the 1 minute, we take out this 1 minute high, I'll get back in. I'll buy that one back. So keep in mind, I just sold two and I still have one, right? I sold one for a profit. I got out of one. I think I lost a little on that one. So I'm probably basically at break even, but I'm still long one. Okay. And I'm prepared to buy another one back. In fact, if we do get the buy signal here, I'll buy two. So I'll have three altogether. When you're right, you want to try to be bigger in size. I'm showing a little bit, this is a little bit more advanced, but this is how you learn how to use it. I mean, you have to see advanced stuff too. Let's see what happens here. So I'm prepared. I have the order set up and I'm going to buy more if this thing tells me to buy more. If it doesn't, and we start taking out these 1 minute lows, then I'm just going to leave it alone. Okay. And I only have one on. So if I lose, I want to try to lose on smaller size. Okay. So if I win on bigger size and lose on smaller size, that gives me a positive reward risk over time. That gives me a better, performance over time. Okay, cool. Any questions, you guys? Any questions? So now at this point, we could say we're following the 1 minute. And you can see how quickly things change on this 15-second. But ideally, when you're working with this, you want to have a 15-minute and an hourly, right? Instead of I have a 15-second and a 1 minute, imagine this is the 15-minute and this is the 1 hour. That would be more ideal. Look, we got another signal here on the 15-second. I will buy it back. I'll give it a try. Why not? Look at what's happening on my 1 minute. We're about to take out the 1 minute high, and that's an inside bar. Look at that. Beautiful. I bought two, actually. That's what I meant to buy. I had two sitting there. All right, so I'm going to put one back. So if I have to blow them out, if I have to start blowing them out, I got three altogether now. All right, I got three, yeah. From 56,838 is my average price. I have three just in the order box there. So if I have to blow it out, I'll blow out all three. Right? If this thing collapses, we take out the low of that inside bar and this thing collapses, I don't want to stick around. You know what? I don't really want to stick around for this low. How low is that anyway? That is 116 points. I really don't want to lose that. Okay. So I have a choice. I can use this stop right here, right? Which is the 15-second stop, which is much smaller. So this is a nice illustration of how you can see the contrast of risk, right? This is only 30, what is that? 36 points. Okay, I'd rather take a 36-point loss than a 116-point loss. I think you would too. So let's see. But the thing is, the chances of getting stopped out are greater because it has a much smaller amount to move. So it's very possible we get stopped out here, but that's going to happen. I mean, that's the noise of a 15-second chart. That's why I don't recommend these charts. Okay, when it works out, it looks great. When it doesn't work out, you'll go, this thing sucks. Well, I'm on a 15-second chart. All of this action it's not this fast when you're working with a 15-minute. Okay, also, when you're working with a 15-minute, for example, your risk is going to be much larger than on Bitcoin than 35 points, right? On a 15-minute, it's probably going to be like, 500 points or something like that. So obviously you're going to have to account for your size. Your size is going to have to be smaller, and it's going to have to be relative to the amount of money in your account. I suggest you do this on paper. Okay, you shouldn't be using real money anyway in the beginning. Try it out on paper before you do anything. If you're in the trial mode. So again, you have 14 days to try this thing for free. Okay, that's not looking good, but let's see. Again, I'm not going to react to the candles. I'm just going to wait for the orders because the candles here can be very erratic and very, see what I mean? Like we get like a sharp red candle followed by a sharp green candle. If I react to the candles, I'm going to be a mess on a 15-second. You cannot react to the candles. You just have to react to the orders. If it touches a stop, I blow it out. If it doesn't touch a stop, I stay in it. It's that simple. I'm not thinking anymore. Okay. The Trade Scanner Pro guides my decisions from here, simplifies the whole process. Now, if you're wondering, how do I get this thing? Okay. So I'm going to type a link here. By the way, Steen mentioned earlier, Steen, I forgot to mention, we have a Trade Scanner Pro Twitter account now. I'll type that in here real quick. So it's x.com Trade Scanner Pro. I hope I spelled this right. This is on Twitter, on X, right? Trade Scanner Pro. And the free trades that we send out each day will go to that account automatically. Okay, so check that out. And also, if you want the Trade Scanner script and you want to do a 14-day free trial, I'm going to put the link in there too. Here, TSCPRO. Okay, this will take you, this link here will take you, I hope I spelled that right. Yeah, correct me if I'm wrong, Steve, and I think that's correct. Right, so if you go to that second link, that's going to take you to this page here. Let me show you. That's this page here. That's the website for the Trade Scanner Pro, okay? It explains how it works, tells you about me, and then you have this section here where you sign up. So you could do the 14 days for free. You don't get billed until after the 14 days. You can do it for a year, which is $22.50 a month. That's $270 for the year. By the way, that's a subscription, so it will renew in a year if you don't cancel it. And you click on this. You could do monthly also, which is $30 a month. That's a pretty reasonable price, and that price is going to change soon. You click on that button. It takes you to the sign up page. Make sure that you fill out this field right here, okay, the TradingView username. If you don't, you're not going to get your invite. Once you fill this out and you submit it, you should get your invite within an hour, okay? Sometimes less. A lot of times you get it less than an hour. It usually doesn't take more than an hour. You will get it within an hour. So don't send me 10 million emails if you don't get it in 5 minutes. Please just give it a chance. And within an hour, you'll get your invite. If you don't, if it takes longer than an hour, then feel free to send me 10 million emails. Okay, but you should get it pretty relatively within an hour. Now, once you have that, like I said, you go to your settings, you put on the boxes we talked about, and you're good to go. Follow my streams. You can go back to all my previous streams in recent months, and I have lots of examples. You can go to my YouTube channel. You could watch the 5 steps to better signals, and you will have a much better idea on how to use this tool properly. I want you to succeed with this tool. I don't want you to sit there and waste your time with it, okay, or lose money with it or whatever, because if you use it improperly, you will lose money. And you will be, playing this. You'll be basically playing a slot machine, and that goes for all these scripts and stuff like that you find. There is no such thing as a script that's based on charting tools that can forecast accurately. There is no such thing. So that's why we focused on confirmation, which is something that you can do, and this is the hardest thing to do, is confirm. Also add your. Oh yeah. So So Steen says if you add your Discord username, you'll also get some bonus channels in the Discord community where we have some really cool, we made some really great updates to the bot. The bot is it's the same idea as what you see here, except it's for people that are more interested in hands off. Like if you don't want to go through all this stuff with the charts like I'm showing here, if this is too much, and it may be too much for you, maybe you don't have the time, you could just subscribe to the bot. And the bot basically calls only trend following signals. So you don't have to worry about all this counter trend and all this forecasting stuff I talked about. The bot just basically looks for trends and continuations of those trends. That's basically it. So it's not forecasting anything. It's just looking for that. The thing is, the bot works on larger time frames, and it'll send you the signal by email. So you could try that out for free. And again, we have all these bonus channels that Steam put together in the community where you can see the bot trades in action. It puts out the bot signals there with a nice chart and everything else. It's really cool. And the amount of instruments that it looks at is much greater than the original bot. Now it looks at index products. It looks at more Forex pairs. It looks at more coins. It even looks at PP coin. Okay. The original bot would never look at PP coin. So there's a lot more variety there. It's very interesting and very cool. So check that out. All right. If you have any questions, let me know. Also, you can also send me messages on TradingView. Usually I get to those messages pretty quickly most of the time. You can send me an email, mark@markpremarkets. You can also access in the Discord community if you need help with something, or if you have a question. Steen is usually available to answer the question right away. Okay, Alex can answer questions about market stuff. So please utilize all of these resources. Beautiful move here, right? Nice. Good thing I was not overreactive to these candles. Like I said earlier, don't react to the candles. It's either we go to the stop and blow it out or not. Okay, so I'm not thinking. Look, so we're at the profit objective again on the 15-second chart. Okay, we're still nowhere near it on the 1-minute chart. I'm going to try to give it a chance. All right? I may give the profit back as a result, but I'm going to try to give it a chance. Notice I'm getting warnings, right? I'm getting warnings, bearish warnings. Notice, right? My trend is bullish and I'm getting these bearish warnings. That's because I'm in counter trend mode. Okay, if I turn off counter trend mode, that'll go away. All right, so watch this. I go here, turn off counter trend mode, and now it's showing me a bearish trade. So don't make that mistake. That's confusing, right? Like, oh, I'm confused now. We have to stick with our original premise. We were looking for longs, and we were trying to find a counter trend on the 15-second chart. So we stick to that idea until it closes. Don't jump around. Don't confuse yourself. Right? You stick to the idea. If it closes, then it closes. And that's how does this close? It's got to go to the trailing stop. And then it closes. It'll vanish. Okay. Should I switch now to trend mode because I think this thing is bearish? Well, has anything changed on my bigger picture? Has this structure changed on my 1-minute chart? We have a support right here. Notice we have a support. That's a higher low support. Remember that situation we had in Bitcoin earlier I talked about in the bigger picture? Same concept, higher low support. If that support holds, we're looking at a higher high. Higher high means eventually testing up there if the trend stays intact. And an early signal of that would be taking out these little minor resistances. So keeping your eye on the forecasting front can at least help you be a little more confident in the position. But that's not necessary because, again, that's what the trailing stop is for. If it's going to continue higher, like we hope it does, the trailing stop should keep me in. Okay, and if it's gonna collapse and the idea is not going to work out, my trailing stop is my way out. And by the way, this is now a risk-free trade because the trailing stop is now at the entry price. How cool is that? That is actually a very useful tool that I think a lot of people don't really appreciate because everyone wants to be a billionaire by tomorrow. Meanwhile, this thing is constantly working to reduce your risk, right? That's the whole idea. And if you constantly reduce your risk, but these profit objectives, they stay fixed. They don't shrink. And on top of that, you may get beyond your profit objective. Your chances of having a positive outcome over time are increased. That's the best we can do. We're playing a random game. All right, now this price action is a little annoying, right? It's because it's not really continuing. What does my 1-minute tell me? Right? We have like a green candle, we have a red candle, we have a green, we have a red. It tries to take out this high. It's not taking out the high. I mean, it's annoying, but we're still, we're above the entry price. We're nowhere near the stop, right? Look at my 1-minute trailing stop. So at this point, look, you make a decision. Which one do you want to use? Do you want to use the 15-second? It's going to get you out much earlier. I mean, look, we're looking at bullish trades on both sides here. Notice on this time frame, I'm not in counter trend mode. I'm in trend mode on my 1 minute over here, right? On my 1 minute. But on my 15-second, I'm still in counter trend mode because that's how I had to take the trade. Don't be confused by that. Then that may take a little time to get used to. Okay, but that's you. Now, that's why I explained to you. It helps if you have a little experience. Beautiful. This is what I want to see. Okay, and this is in line with the bigger picture trend. On the 1 minute, that's in line, right? A higher low should lead to higher high. Beautiful. Let's take some money off the table here. So I'm going to sell one just because I want to sell one, right? I don't have to wait for a level. I just want to lock in profit. It's a good reward risk. It's a nice little pop-up, okay? And I just wanted to get out of one. I still have two. Don't let greed drive your decisions. I'm going to hold this thing all the way till up here because, I want to feel good about myself. That's a mistake because the longer you hold on, the more risk you take. And the more you look for, the less likely you're going to reach it, right? I mean, theoretically, it should get up here, but it may fool around a lot first. It may give the whole move back, make a lower low, and then get up there. Like, it's random. We don't know. So don't make that mistake. You have a chance to take some money off the table, especially when you see a vertical candle, like a very strong, dramatic vertical candle. Take something off the table, right? Because that's usually shorts are getting squeezed or whatever's happening. Just take something off the table. Also, a lot of longs will pile in because it's breaking out because their RSI told them to go long or something like that here. Meanwhile, we're long at a much better price, right? They're just getting long now, and they're getting long right into this resistance. We're preparing to get out, right? We have a profit objective up there. We're preparing to get out. Look at a trailing stop on the 15-second. It's protected. It's almost at the profit objective. So now I'd be locking in all that profit if it goes back there, right? I'm actually locking in the profit. So this is a profitable trade. Okay. So again, similar to the one I had the week before. Not every trade is going to be like this. Just so you know, not every trade is going to be like this, but the Trade Scanner Pro is what opens up these possibilities. Otherwise, I would have banged this thing out like probably back here somewhere on these red candles, reacting to these red candles, or maybe reacting over here to these red candles, which is a lot of mistakes that we make, right? Reacting to candles. Look at my 1 minute. Pin bars. Okay, I don't want to see this pin bar here. I mean, that is certainly something I would typically react to if I see a pin bar, but usually if it's on a large time frame, right? Bearish pin bar. I don't like to see that, but I'm not reacting. I'm letting the orders make the decisions for me. So we touch this trailing stop, I'll blow it out. I'll blow them out, both of them. I got two of them. It's green. Who cares, right? It's profitable. What do I care? When you use a trailing stop, you're never going to sell the top, or you're never going to buy the bottom. It's always going to be a retracement off that top or bottom because that's how you're going to reach a trailing stop, right? In order to get a top or bottom, you have to have a limit order outside in advance, and it's going to be a random occurrence. Maybe it gets there and turns. A lot of times it just blows through your order and keeps going, and you miss out and whatever. That's why the trailing stop opens up the possibility of more. Okay. What if there's some ridiculous news and Bitcoin just goes vertical for 500 points for absolutely no reason? Just some nonsense news comes out. You'll still be in it. Okay. And the trailing stop will eventually catch up. And that would have been 500 points you never would have captured. Right. So at this point, this is where the script basically opens up the random possibility of the market in your favor rather than against you, which is usually the case. Beautiful. There we go. Look at that. I like it. Nice. I like it when the candles pop like that. Okay. So again, the trailing stop is keeping me in. What's going to happen here on the 15-second is this trailing stop is going to start rising right above the objective. See that? Starting to rise above the objective. And it's just locking in more profit. So I respect the orders. If I'm getting out here, I'm locking it in there. So I don't get the top. Oh, who cares if I don't get the top? It may just tap right there. See that? How quickly it changes? All right, no problem. It's still a profit. Like I just said, don't let greed drive your decisions. What I don't like about this, I mean, I don't like the outside bar. That's usually a bad sign. But I'm going to let the script the script is going to have to be responsible for my exit, not my thinking. because I can easily be wrong. It doesn't matter if there's like these candles are highly random, right? And if you understand the random nature of the market, you understand that. So let's see. Again, it's up to the market. I'll blow this thing out once we reach the trailing stop, and that'll be that. Okay, so you guys see the lesson? Have you guys take this opportunity to ask me questions before I sign off? Any questions? Do you see the value of this? I know some of you follow this every week, so some of you you're used to it. But if you're new, okay, Monica, I tried 1 and 5 minute charts all week. It was a mess. 15 minutes seemed the best to learn how to scan. Okay, so Monica, thanks for mentioning that. I know you're like a recent student on this. Yeah, 1 and 5 minute, like to play them, like I show you here. You see how like it's all over the place, right? So go back and review these streams that I do, because I show these 1 and 5 minute examples, typically 1 minute charts and sub 1 minute charts all the time. That's where you're going to learn how to do it, because this idea that I arrived at came basically, we started with the 1 hour. We determined on the 1 hour that the trend is generally bullish, right? The structure was bullish, and we're looking for that structure to continue. And the 1 minute is continuing it. The only reason I'm working on a 15-second is because it takes forever to get a signal on the 1 minute, right? And I'm trying to demonstrate the chart here, and I want to see signals to show you guys how to manage them. And that's why I have to go this low. If you notice, look at all these bearish warnings I got here. Don't be confused by that. Turn it off. If you find that to be problematic, simply go here, turn off the heads up, turn it off, right? Now it's nice and clean, right? That's why we gave you the options to turn these things on and off. So get used to that. I know people are lazy and they don't like to be messing with the settings all the time, but you have to put in a little effort. It's not that hard. You just have to know what you're looking for, right? And then align this thing. Like, oh, look, I'm aligned right now. And my looks like here, let me turn this back on. It's counter trend. My trade, I guess because I turned it, yeah. When I turned off the heads up, my trade also vanished. So in a situation like that, I mean, that's where I just refer to the 1 minute in that case, because look, we have two signals here at the same time. The 1 minute was the original one I was looking for, but I got it earlier on the 15-second. So anyway, Monica, just practice on the 1 minute and 5 minute or whatever. Use the 5 minute like I used here, the 1 minute and the 15-second. You'd use the 5 minute as your broader one and the 1 minute as your action time frame where you're taking the trades. Try that. Okay, and do it on paper. Because again, it is confusing. And time of day can also play a role. So you want to make sure you're doing it more active. This is usually a less active time of day, but hey, sometimes we get some action here. Steen says, also take into account that when you change the settings, it could happen that the trade is gone because the trading view always, oh, good. Thanks for pointing that out, Steen. So Steen is saying here that sometimes when you change the settings, the trading view refreshes the whatever, and the trade may vanish as a result. Okay. So that can happen sometimes. That's a trading view function. That happens with trading view. So sometimes the trade may vanish in that case, if you're messing around with the settings like we saw there. Now, Steen, I'm waiting for this trailing stop to continue here. It's interesting. It looks like it's stuck on the 15-second. Is that thing stuck? Oh, no, it's not stuck. Look at that. It just rose above there. It just needs time. It just needs time to, probably if I make it more aggressive, I change it from regular to tight. Let's see like what it does. Oh, see, the trade vanished because it reset. You see that? That's what Steve was talking about. So I put it back to regular. Will the trade come back? Yeah, the trade came back. See that? Patience, he's telling me. Patience. See that? Patience. I should be telling myself that. Okay, anyway, there we go. So, but you saw how when I changed the speed of the trailing stop, the trade vanished because it reset the trade. That's a trading view thing. There's not much we can do about that. Now, if you notice, again, if you're in this situation, you have to decide. Do you want to work with this one on the 15-second, or do you want to work on the 1 minute? Notice the 1 minute is still not risk-free yet. And we're almost at the 1 minute objective, right? And it's just hesitating up here. See that? So what do? You decide which one you want to use. If you're going to be more aggressive and you want to give the trade more of a chance, you use this one. It's going to be up to you. If you want to be more conservative and take your profit because you have a nice little profit here, you use this one. This one's above your profit objective. So this guarantees you're locking in, but you have to pick one, and then you respect it. Okay, look, we're trying to continue higher. So the key to this whole thing was, again, we determined to pick this side of the market because the structure told us to. It wasn't some kind of special magical thing or some kind of guess. It was the structure said bullish. Even though we were at a resistance, the structure said bullish. If the structure is bullish, we're anticipating a higher high, even though we're at resistance, right? So the resistance carries less weight. That's part of having some experience. And that's why I teach you that here, so that you could learn those concepts and then apply them. Again, if you take these signals randomly and just jump in, you're going to have problems because you're missing out on some of these perspective things that you have to have in place in order to align properly. Right? Make sense? Okay, you guys. I've been talking way too long here. Any questions? I mean, this trade just doesn't want to pull back. It's a good thing I'm long. I'm just probably going to blow it out here. How much? So, look, I mean, you could see I'm green a couple of $100. I have 2 contracts. Just for fun, I'll blow one out here. Okay, and then I'll just hold on to the other one because I need to wrap up the stream and. So I'm just seeing it. Does it go to the profit objective or what? It's really, it looks like this. We have a higher low right here. Oh, there we go. It must have heard me. Usually it does the opposite of what I say. Okay, so I'm just going to close it. All right, nice. So I close it at the profit objective. If I wanted to sit on this thing, I mean, the proper thing to do, if I wasn't streaming, would just to be to sit on this thing and let it go until it reaches the trailing stop. I mean, look, it wants to go beyond it. My 1 minute trailing stop is now beyond break even. So, I mean, at this point, the right thing to do is let it ride. I sold, especially if I sold 2 contracts for a profit, I just sit on one and see how far it wants to go. This thing may do something stupid and run 500 points, and I could be in on that, right? The Trade Scanner Pro opens that possibility up for you, especially if you're a newer, because chances are you would have gotten out a long time ago, especially on this outside bar right here when it looked like garbage, right? And here we are. The market is random. It doesn't matter that we get these red candles in here. It's random. Just like right now, this thing can give this entire move back in 2 seconds and touch the trailing stop. The market is random. All right. So, people are all obsessed with being right and trends and blah, 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 and oscillator this and precision. You're wasting your time. Markets are random. See what I mean? It's turning red now. It's random. That should be your priority. Markets are random. You're managing risk. Markets are random. That means you're playing a slot machine, especially on these smaller time frames. Get that through your head. Stop with this nonsense about precision and trends and level this and market profile that. Actually, I shouldn't I don't make fun of market profile. I'm just throwing that in there. Market profile is actually very useful. But all these other things that people get obsessed with, moving averages, moving average crossover, stochastic, blah, 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 you're wasting your time. Okay? You don't need any of that. You just need to come up with a basic forecast and a way to confirm it. That's it. And then you let the market choose its path from there. We are passive in this. We let the market talk. We listen. We follow. We don't assert ourselves because the market doesn't care about what we think. We have no power over the market. The only thing we control is what we risk and pressing the button to get out. That's all we control. So hopefully we get out green, not red. But that's the only thing we do is we can press the button to get in and to press the button to get out. Other than that, everything between that is up to the market. Okay, so you want to align with the market. Stop with all the nonsense. If you're all obsessed with news and I need to know what's going on, you're just wasting your time. I don't mean to be negative. I know I'm going on a rant, but I hear this over and over again. Like, oh, the news this, oh, Bitcoin dominance that. It's like, okay. You want to waste your time with that stuff? Have fun. But that's why there's so much confusion. And no one is ever going to tell you the things that I tell you. Because most people, again, they just want you to take action on things. They want you to buy their products, their training, whatever. Exchanges want you to trade. So they'll tell you whatever you want to hear. That's how this business works. Like I said before, the job of the retail trader is to make others rich. Stop being that retail trader. Now, of course, not everyone can be that, right? But the people that follow me, I'd like you to be that. If everyone was that, there'd be no money to be made, because we need ignorant people to make foolish mistakes. That's where money comes from, in case you don't know. That's how this game works. It's always worked that way. Okay. This idea of, oh, the market's going to be like my ATM and it's this wonderful, beautiful thing. And, then they start tying religion in with it. No, that's all nonsense. The market is a place where you take money from people who are ignorant. That is what it is. That's the reality of it. They make it try to sound sophisticated and grand and this noble thing, and you're investing in companies and blah, blah, blah. And yes, there's some truth to that. But when you're a day trader, you're just basically making money off of people who make mistakes. And like I said in my previous stream, robots don't make mistakes. And robots are mostly who we're up against. Okay. All right, you guys, that's it. I'm not talking anymore. I got to stop here. So I don't see any questions. Oh, look at that. Talk about random. Good thing I'm out. So if you want to sign up for the Trade Scanner Pro, you know where to go. There's the links, right? I had the links earlier. Let me go back to my thing there, right? There's this link that'll take you to the Trade Scanner Pro page. You could sign up there and all that stuff. And check out this Trade Scanner Pro Twitter feed that Stian set up there, because that's where it will send out, the bot will send out trades there. Okay. And soon we'll have like the performance reports and stuff like that too. But hey, check it out. It's a way you can see a free trade every day. It'll share it there. Okay. Eventually, I think it's Stian's working on that. So yeah, check that out. Okay, you guys. So if you have any questions, you know where to find me. By the way, real quick, if I ever reach out to you on any platform and I'm asking you for money, it's not me, it's a fake. Report that person, and that person is trying to rob you. Don't be fooled. Same with Stian and Alex. None of us will reach out to you first. None of us will send you to a strange website that's not Market Signals Pro, and none of us will ask you for money in a private message. So if you get a strange message like that from someone that claims to be a moderator or whatever, it's a fake. Report that person, block that person. We have a channel in the server where you can also let everyone know that there's a scammer about. We get that kind of stuff all the time. Okay, so please don't be fooled. At the moment, I placed the post, but the goal is to, right. So you see, Steen just said with the Trade Scanner Twitter feed, and we're also, I think he's going to have it on Instagram. He's working on a few really cool things. The bot is going to share the signals there. So if you don't want to get the email, you could sign up for the Twitter, and then you'll be able to get the signals, one signal every day on Twitter. How cool is that? That's really cool. So check that out. It's x.com forward. Yeah, I have the link right here. I'll put it in the thing again. Check that out. Okay, sign up for it, and then you don't have to worry about getting emails all the time. You can just get it on your Twitter feed. And then what's going to make that really cool, here's the link right here. What's going to make that really cool is when we're able to show the equity curve performance. That's a big thing. And I think, because we have the performance page on the website, and I think people don't really know how to make sense of that. If they see a block of red, they're like, oh, this thing sucks. If they see a block of green, they're, oh, this thing's cool. How do I sign up for it? Right? It's always the case. I want to show the equity curve performance so you could see how equity would change over time. And what you're going to see is a positive bias. And that's because of the reward risk. It wins more when it wins than when it loses. The other advantage to the bot is the bot doesn't miss trades. It takes all of them. So when at some point, when we are able to have the bot trade on your behalf, you'll be able to participate in that. But that, we're still a ways from that. And, it sounds really cool. But then when we actually come out with, I know people are like, oh, I don't know now. Right. So it's going to take us some time. Wow. Bitcoin reversed. Look at that. Right around. Interesting, right? Interesting how it never touched this trailing stop. Anyway. All right, you guys. So I'm going to leave you guys with that. If you have any questions, you guys know where to find me. And again, if you want training, you come here every week, every Monday, I'm on here, and this is your chance to get some training for the Trade Scanner Pro, and you can get your questions answered, and you can use this thing effectively. If you can't be here at this time, watch it after the fact. All right? Okay, I'll leave you with that. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you very much for watching.